Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Sebastian, Chief Operating Officer of Option Pit COO and Options Expiration Review. And Mark, what an expiration it is. We are coming into the end of the second quarter, end of the first half. We have the Russell rebalance next to Friday the 25th. There's kind of a lot going on this month.
Yeah, it's been a crazy day. It is quad witching Friday, which means index options, futures options, and equity options all expire on the same day. And on the open, we saw the Nasdaq, the Russell 2000, and the S&P 500 absolutely blow through some of the big downside strikes. That's part of what really set us off, is that we endangered that 4,200 level in the S&P 500, and traders just pushed it lower. That was on the back of Federal Reserve Governor Bullard saying that he sees an interest rate hike in 2022, which I think caught the market off guard, considering the Fed had just come out on Wednesday and said 2023.
Yeah, considering the meeting this week on Wednesday was one of the most highly anticipated, and then to kind of have that thrown into the mix unexpectedly, is certainly going to inject some volatility into the market. But Mark, my question is for you, and I've been asking other guests to come on the show. I feel like the Fed has been really clear with telegraphing their messages. If we know rate hikes are on the horizon, if we know they could potentially start tapering, why does the market have these tantrums like it does when we know this is going to happen? It's not like a sell the news event. This isn't something that was just introduced the other day.
Yeah, it's a little bit of a knee-jerk reaction. We saw something similar with Wednesday's announcement, and then we sold off and then kind of rallied, then sat there, and I think we were going to end up having a pretty nice day until Bullard spoke, and what he did was allow a lot of that downside open interest to really take hold of this market, and we're seeing some continuance of that throughout the day, but truth be told, we're only about $10 away from where we settled in the NDX and the S&P today. So it's not like we've seen a continued just a giant push of the market lower. That being said, VIX and VolQ have been getting stronger and stronger and stronger throughout the day. So both of those are looking to end on the highs, and then Monday will be very interesting. If we see some follow through on Monday, this could get really ugly. If Monday gets bought, then I would be less than shocked if we're at back to all-time highs in the S&P and threatening those things on the Nasdaq, which, by the way, has been vastly outperforming the other major indexes. The real ugly one has been the Dow Jones Industrial Average. It's off about 1,500 points from where it was just 10 days ago.
So, Mark, with that said, whether you're looking to position into the weekend or at least through the end of the month, what are you doing here? Are you buying anything? Are you selling any kinds of positions?
Yeah, I'm looking to play momentum here, but I am going to be setting up to fade some of this volatility here. I do think that cooler heads will prevail. We're heading into the 4th of July. I expect volatility to dampen a little bit, and I think you'll see some patriotic buying next week, or certainly the following, leading into the 4th of July.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.